Financial statements are the end products of the accounting process which reveals the financial results of the specified period and financial position as on particular date. It is the basic and formal annual report through which a business communicates financial information to various users. Financial statements are prepared in the form of final account on the basis of trial balance. The preparation of final account is the last step involved in the accounting process. Final account can be, you can say, income statement. Income statement include trading account and profit and loss account. Then balance sheet, which is balances all liabilities are equal to asset. Then cash flows, then equity statements are the financial statements of the business organization, and they are very important for making or taking the business decision as well. All financial statements are the source of documents, but how business transactions are recorded in the various books of account, we will see that shoe manufacturing company purchased machinery of rupees 10,000. So the value of that particular machinery is rupees 10,000 is coming in the business. And next transaction, that is received 1,000 rupees from a customer. In that, whatever the money received, the value of that is 1,000 rupees. So it is again cash which is coming into a business and increases the asset. So debtors are decreased. So whatever the give and take happens into the business transaction which are recorded in the first book of accounts, that is journals, or you can say it's also called as a primary book of accounts or basic book of accounts. Then ledger. What actually ledger? It's a T type of account which is recording all business transaction in ledger, and it's also called as secondary book of accounts. Then all the ledger transaction which are recorded in a trial balance and the total of both the sides, debit and credit sides, are equal or tallied in trial balance. We already know that accounting is the language of business. Company prepare trial balance periodically. Debit and credit amount column should be equal. So the purpose of balance sheet or trial balance preparing to ensure all the entries in a company's bookkeeping system are mathematically correct. Then financial statements, we all know that the end product of all accounting process is the financial statement, and financial statement are the source of documents which are used by many stakeholders of the company. A financial statement shows you where a company money came from, where it went and where it is now. The many types of financial statement, that is, first one is balance sheet, income statement, cash flow statement. Actually, the financial statement are prepared in the form of final account on the basis of the trial balance. The preparation of the final account is the last step involved in the accounting process. Final account includes trading account, profit and loss account, and balance sheet. Firstly, balance sheet. What is balance sheet? It shows financial position of a company for a specific period of time. It shows asset and liabilities, but all assets and liabilities are showed in a value. Actually, balance sheet has a 4 section. On asset side, there is a fixed asset and current asset. On liabilities side, there is capital and current asset. And in income statement has 2 types: trading account and P&L account. P&L account, that is profit and loss account. Trading account, it is made only for goods whatever purchase and sell. For example, sale is 100 rupees and their COGS is 80. So profit for that, or you can say gross profit for that product is 20 rupees. So trial balance, from the trial balance all the elements are recorded into the balance sheet. So in income statement, all that is P&L account is also main type of income statement. In that it reports profitability over a specific period of time. It shows revenue, expenses. So from that they can show the net profit or net loss for the period of month. It can be a year. So if income statement shows that company is in a profit, better profit, so that is showing the profitability position of the company. Then cash flow statement that is shows the where cash is coming from and where the cash is used for. What are the objectives of financial statement? We already studied the income statement shows profitability, then balance sheet shows the position of company or organization. It also provides reliable financial information about economic resources, that is asset, and liabilities, that is obligation of a business firm. It's also ascertain the gross financial position or true financial position of business. It also detects error and mistake that have taken place. Then what is actually payable, tax payable amount, it also shown by the financial statement. It's provide information about the earning capacity of the firm. So management can take effective decision to control over the financial operation of the businesses. Next objective is to provide reliable information about the changes in resources and obligation arising out of business activity. To disclose the various accounting policies followed in preparing the financial statement to its various user group. Then to disclose to the extent possible other related information to financial statement that is relevant to the needs of the users. Actually, the income statement already we have studied. It shows the profit during the financial year. It also shows the gross profit as well as gross loss. Then true financial positions can be determined. Then detect the errors of the businesses which are occurred in the accounting process. Important point from financial statement, that is importance of financial statement, that is how many users are available in market for the financial statement. That is, you can see first one is importance to management. Actually management are the main users for the financial statement because they come to know that financial position of the business and what will be the next decision will be taken for the better health financial position of the company. So in absence of information we are including the financial statement, management can't control the various operations of the organization. Then importance to the creditors. So creditors are the suppliers of the company, so they are providing many materials to the company. If company creditors come to know that financial position of a company is good, so they are ready to supply the all required materials for the organization. Then third one is the bankers. Bankers are used all the financial data or financial statement, all annual reports which are generated by the company, which are recorded in the books of accounts, which all are followed by the bankers. They are concerned with the ability of paying current debts and the current operation of the company. So bankers want advance payment as well as advance should be repaid at a proper time. Then importance to the investors. Investors are key, you can say key factor for the company. They are investing the shares or they are subscribing the shares But when they come to know that from the financial statement they are analyzing and they are investing in the company shares, or they are look to the financial position of the business concern, and many investors are very eager to see or look after the financial statements. Then next is importance to the government. Importance to the government, that is all whatever the tax payable by the organization all depends on the profit of the company. Company is in a profit, so company is ready to pay the taxes to the government. So government is also user of the financial statement. Preparation of final account of proprietary firm. We already studied that all business transaction whatever valued in money which are recorded in the first book of entry, that is journal, and then secondary books, that is you can say ledger, and all financial statement are the last stage of accounting process, but it is prepared from trial balance. That is, trial balance means it's a list of all expenses, income, asset and liabilities. On that basis final accounts are prepared. So final account is two types, divided in two types, that is trading account, P&L account. It's combinedly called as income statement. It can be a summary of income expenses provides in a net results. Then balance sheet are the summary of asset liabilities which are accumulated in the financial positions. In final account, primary account, or you can say statement is prepared, that is trading account. Here we can see format of trading account. The title of trading account is trading account for dash business for the period ending. So it has a format like a debit side and credit side. Particulars amount, PAPA. So it is the first step in preparing of financial statement. It consider all trading and manufacturing activity of a business, help to ascertain gross profit or loss for a given period. So you can see here, firstly, whatever the stock it with the company, by adding purchases and returns the whatever the defected product, we will get the purchases. Then we can add direct expenses whatever paid to the wages, wages to the labor, then trading expenses, manufacturing activities which are included in the wages, then carriage inwards, whatever the transportation cost is required to in the material, it's called as a carriage inwards, also denoted in the debit side of the trading account. Then credit side of the account, it includes the goods, whatever the goods are resale or sale by the company which are included in the sales, and then you can say whatever the return sales, it minus, or you can say deducted from the sales, and you will again you have to add the closing stocks and whatever the gross loss which you can add into the trading account credit side. So actually what is the need for trading account? The trading account, it gives the knowledge of gross profit and direct expenses, and it also provide, or you can say precaution against future loss of sale. Now this is the format for profit and loss account statement. In that there is again PA, particulars amount, and PA from credit side, that is particulars and amount. It is an account which includes all indirect expenses and income and help us to ascertain net profit or net loss. We already seen in trading account, that is in trading account we can ascertain the gross profit and gross loss. But in P&L account, we are ascertain the net profit or net loss. It follows the rule of nominal account, that is indirect expenses which are included into the P&L account. For example, we can read here, that is management expenses, the expenses which are done on office and administrative expenses like salaries, office, rent, rate, telephone charges, postage, telegram and insurance. Then selling and distribution expenses. Whatever the goods are sold by the company, the transportation cost will be there, then advertisement cost will be there, then promotion of the products, all expenses related to selling and distribution of the product. Then maintenance and financial changes. So you can consider here the repairs, then discount and commissions. All the maintenance and financial expenses will are done in the P&L accounts and recorded in the profit and loss account statement. And on credit side, whatever the indirect income which are recorded on the credit side, you can see here discount received, commission received, interest received, then rent of property has been received, dividend from shares which are recorded in the P&L account of the company. Balance sheet. Now here we can see the format of balance sheet. It has two sides, liability side and asset side. Here we have to write all the liabilities on liability side and its amount, then all assets on asset side and its amount. Balance sheet is a statement of the asset and liabilities and capital of the business or others are for a particular time, detailing the balance of income and expenditure over the period. So balance sheet, you can see here on capital side there is whatever the profit you can add in capital, then whatever the drawings by the proprietor you can less here, then long term loans which are taken by the company which are on all on the liability side, and then next part is current liabilities which are converted into a cash within a 1 year period. It includes bank overdraft, creditors, bills payable, provision for taxation which are included in the current liabilities. We can see here on asset side, that is fixed asset. Fixed asset, that is a permanent asset for the company, for example land and building, plant and machinery, furniture and fixtures, then intangible fixed asset, then goodwill and patents or whatever the investment are there. Then next part is current asset. Current asset are the stock, debtors, short term investment, bills receivable, cash at bank and cash in hand. So management also take very important financial decision after looking the asset side, fixed asset, tangible asset, intangible asset of the company. Thank you for patience listening. If you have any query, please contact on given mail ID. Thank you.